A few days ago, we were talking about gold, and we were looking at gold at the level of 1550 to 1552. 1552 is serving as support or resistance based on what the market decides to do. Like we always say, we have nothing to do about the market. It decides to do what it wants, and it is always right. Now, this morning, although yesterday we sold a bit of gold, but gold quickly bounced from a key support level which I've just drawn this morning. The level of 1535 is support, and for those who have been following my other videos, I told you I use the 8 exponential moving average, that blue moving average, and the 20 exponential moving average, the pinkish one. Now, so from what we are seeing, gold bounced from the 1535 yesterday with a bullish pin bar, and we can see buyers moving ahead to challenge the key level of 1550. It all comes down to how this pair closes today. We may not know exactly what's going to happen, because given what happened yesterday, the level 1550 is now serving as resistance. It is still resistance until broken. Well, the reason why I've shot this video this morning is to pass on an advice to the genius super traders. One, it is best to keep in the direction of the trend. Gold, as you can see, gold has been trending higher. If I can, you can see how gold has been trending higher. We had this bullish flag here. We can call it a small falling wedge, which broke out to the upside, and coming back to today, we can see that the trend for gold is still an upward trend. So I would advise people to remain in the direction of the trend. And like I always tell you, I always read. This morning I also read that telling us that the tariffs America imposed on China are weighing on the markets as of today. It means that when there are tariffs, it means that there is kind of there's a fusion, there is war, there is bad blood. No one wants heavy taxes on their businesses. So because America is maintaining those heavy tariffs on China, it means that because of that kind of bad flow going on between them, we see the safe havens like gold and the Japanese yen increasing in demand. Their demand is increasing. So what I think is, based on how the market would close today, a close above 1550 or 1552 would be a bullish sign for gold, and I would really take this position to buy, because if America says that the tariffs they slapped on China are somehow weighing on the markets, and they are going to remain in place up to about until November, when the elections are about to take place. That's for the American elections. So it implies it is safer for someone to buy gold. Of course, you can't trade only technicals. We need both factors to our side, and that's why we say that as a good trader, you should always be willing to easily change from buying to selling. So in this case, I would advise traders to wait for today and take take a buy position in case gold closes the day above this support, which is still serving as resistance as for now. But at the same time, I know some of you have your own ways of trading, smaller time frames, and those other time frames. If you have ways of trading them, I would still encourage you to look for buying opportunities on gold. Do not sell. At least that's the advice we're giving at the Genius Super Trades. Let's buy this commodity, given the way things are moving right now. At the same time, let's talk. I'll talk about oil. Oil, also known as oil is also known as XTI USD. Oil, like I told you, it is right now, as this very moment, it is seated at the 58.0 support level. As we can see, it is still serving as support, but we very well know, those who have followed this channel for some time, we know that a close below this support will be a sign of weakness for oil, and we shall see oil even falling further. On the way down, we can see oil can fall to as far as 52, price of 52. So meaning oil can, the 58.0 is the deciding factor between buyers and sellers. So keep a good watch on that level, keep a good level on this price to make a proper decision, especially the following day. And just like I've just said when I was telling you about gold, that oil and gold are very sensitive to the fundamentals, especially about the peace and the wars going on in the world right now, because in times of peace, when there's some kind of peace agreements going on, oil takes advantage of that and it surges. In other words, it buys when there's. That's why right now you can see selling going on oil, just because, like I told you earlier in the gold analysis, that the tariffs America imposed on China are going to keep weighing on the markets, and in fact they're weighing on the markets even right now. That means if those tariffs are still weighing on the markets, we shall see oil losing ground now. But until we see a close below 58.0, where the level is still serving as support. But given the fundamentals in the market, there are still more bears for oil than buyers. So that said, I am bullish on gold and bearish on oil. Until then, keep subscribing, keep supporting, keep watching, and keep learning, and you'll be a successful trader. Thank you.